Toll Brothers CEO Doug Yearley joining us now in our studios right here in New York. He's going to talk with us about the company and where he thinks the U.S. and global economies are headed. But first up, we want to talk about the company's forays into the international market. Doug, great to have you here.
Thanks for having me.
Do you have to go international?
No, absolutely not. We have a great footprint here in the States. We're in 50 markets around the country. Most of the affluent markets we're already in. But we think we have a great brand. It's a global economy. There's great opportunities internationally, so we're just checking them out. But right now, we're very happy with the U.S. footprint, and if that continues, that's fine.
So it's an ambitious move, but one that you want to make. You're going to proceed cautiously, I'm sure. Right. How long do you think it's going to take? If it takes you a year to get into Seattle, how long does it take you to get into Abu Dhabi?
Well, we've checked Abu Dhabi off the list. We've checked Dubai off the list. Right now, it's China or Brazil. We have one employee in China. We have a team going to Brazil next week for the first time. So it's a ways off. And if we do anything, it will be with a local partner, a great local builder. It'll be very careful. We're going to leverage our brand. We know the Chinese people are very brand conscious. So the idea of buying from America's luxury home builder, we like.
So, but the Middle East, not right now.
Not right now.
What's the biggest thing that takes so long? Is it dealing with government issues, Doug, or what is it in terms of going overseas?
It's our own internal comfort with the move. We're going to be very cautious. We're going to study a lot of different cities. We're going to study a lot of different land opportunities. We're going to talk to a lot of different builder partners, home builder partners over there. So it's just internally we're going to be very careful.
When they talk about the Chinese property bubble, though, does that make you a little nervous?
Absolutely. It makes me very nervous.
Makes you very nervous. So again, just proceed cautiously.
That's right.
You know, I instantly think when you say you've got a team in Brazil and you're sending one to China about jobs, because, you know, a lot of people looking for jobs would love to be part of that team. What does the jobs picture look like for Toll Brothers? I mean, we always hear about construction being the place where jobs need to come back to revive an economy from a recession. So
it's huge. Internally, we're down about 70% in employee count. We had 7,200 employees
70%.
in 05. 70%.
Big.
But home building as a whole, it's not just the home builders and their employees, it's all the subcontractors. And then once you buy a house, you've got to go buy drapes and you've got to buy furniture and landscaping and patio furniture, et cetera. So there's a huge impact that housing has on the entire economy.
Doug, how much are you worried about foreclosures going forward? We keep breaking down some of the numbers and it still looks pretty shaky.
Well, we'd like them to go away quicker, but it hasn't affected our business that much. We're in the luxury end of the business. More than half our business is Washington, D.C. to Boston. That's not a foreclosure corridor.
You really have been immune from a lot of it, haven't you?
A lot of it. You know, we have some exposure in Las Vegas and Phoenix and parts of Florida, but we're pretty lucky. Being an East Coast builder and a higher price builder, we've been immune from most of it.
So you're not concerned about a big overhang of inventory just sort of sitting there?
No, we need demand to come back, and then I don't think we'll be talking about inventory overhang anymore. Right now, we need to trigger new demand, and I think once that improves, we'll be better.
How do you do that? I mean, just putting a nice marble countertop in the kitchen or a big fireplace in a double high living room doesn't really bring demand back, does it? Or can you really work on that from your end?
I wish it did, because if it did, we'd be the best at it. But no, we can help by having the best offering, by having the best communities, the best architecture, the security of Toll Brothers. We're not going away. But ultimately, we can do all that perfectly. We don't control demand. And we just have to wait and be ready.
Well, when it comes to demand, we talk about how still in the housing sector, just like in the auto sector, incentives are still a part of it. I know when we talked to Darlene Devona of Toll, she said we're seeing less and less of that. Do you think that's going to go away in the next 6 to 12 months for you guys?
There's always an incentive. The buyer always wants to feel like they got something off. They need to feel like they won.
Good or bad times?
Even in good times, we had very modest incentives. It's tough to sell $1 million house without giving an upgraded kitchen cabinet or a jacuzzi tub or something that's an extra. The incentives have come down dramatically. I think the buyers understand it's a great time to buy. Pricing is right. Interest rates are very low. In certain locations, they're still a little bit scared, but things are definitely improving, and we're beginning to control incentives a lot more. We don't have complete pricing power, but in some markets, we have some pricing power, and it's getting better.
You know, you say interest rates are low, and I know as someone who just bought a house that even with low interest rates, it's still not easy to get a mortgage, and even if you have good credit, it still takes forever, and it's a real pain now.
Yep.
How much do you think credit is readily available, and how much can Toll Brothers help to sort of move that along, or do you not go there?
Well, our clients are a great client to a bank because they have great credit scores. They generally put 30% down on the purchase of their home. They only mortgage 70%. And with the affluence of our buyer, the bank thinks I've got credit cards, I've got savings accounts, I've got kids' trusts. So the banks like our clients, and we don't have any problems with credit right now.
Let me also ask you about kind of the mix. And I think about when you and I were out in Pennsylvania, you talked about how the big single-family homes, that's still a big portion of what you guys do. And you expect it to stay about 50% going forward. Even with the demand of baby boomers to maybe have those active communities, you don't see more growth going in that area?
Well, I think 50% would be a great number for us to continue the luxury end of the business. You're right. The baby boomers are now aging. I think a boomer hits 65. 10,000 boomers a day hit 65 for the next 20 years. And we're focused on that. We're doing more and more empty nester, active adult, second home resort community. But the American dream is still that big house in the great school district in the suburbs. And 50% of our business is where I think it'll be going forward.
You had a pretty good first quarter, beating expectations. But can you continue in at that level without government help? Obviously, government intervention has been stopped in the housing market, but across the board, the government is going to be cutting back here. Is it scary?
No, I think we feel a lot better. We're up a little bit over last year's numbers. And what's nice is last year's numbers were pushed forward because of the tax credit, which expired in May. This year, I think the demand is more natural. It's not being pushed forward, and our numbers are up slightly, so that's very encouraging.
What about, though, Doug, as we see all the stimulus programs go away, and I think about what the Fed's been doing and so on and so forth, there are folks who are pretty nervous that say that could be problematic for the economy. And while you play to a different market that seems to be somewhat immune from the economy, you could feel some impact. Does that kind of keep you up at all? Sure.
Yeah, we're not out of this yet. Our buyers, because buying a Toll house is more of a discretionary decision, it's emotional. It's not an affordability issue. We're much more connected to the consumer confidence numbers than we are to any other number out there. And confidence has been up lately.
Right.
But buyers are still scared. There's no question we have a ways to go.
What about something with the oil market? We talked about higher oil prices. Is that something that you think, okay, that could impact us maybe for a couple of months or something?
Yeah, I think on the building cost side, it'll have a small impact. More than half of our building costs are labor costs. But again, it's buyer confidence. But buyers see those oil prices going up,
right,
and they think maybe this is not the time to buy. Maybe we're headed towards more problems. So any sort of bad news that's on the front page is not good for us.
You talk about buyer confidence. You talk about demand. When it comes back, you're in the right position. But what does it look like now? What's the trajectory when you look at the chart? From your perspective?
Improving. There's no question the quality of the buyer coming into our sales center is improving. They're interested in purchasing a home. They feel better about job security. They feel better about their own home they have to sell. It is improving. It's just improving slowly. And right now, I think that's okay.
I wonder how much the stock market has to do with it, because obviously we've been on a pretty good run since the bottom in 2009.
For our buyers, it means a lot. They're heavily invested in the markets, and there's no question, just like consumer confidence numbers, stock market moves can affect our business a lot.
You know, it's funny. We just talked with Melinda Gates and about the importance of education to this country. I mean, you guys look to build in areas where there's good school districts. I mean, that's an important factor, correct?
That's critical to us, yes.
Yeah.
Absolutely. We look to the best towns, which generally means the best schools. You know, we're selling second, third, move-up home. We're selling to families that want to get to that dream home, which is usually in the best school.
Is that like the number one factor, Doug? I'm just curious, like when you guys look at land around the country, what are kind of some of the key factors?
Schools are huge. Convenience to employment base is very, very important. Prestige of a town. People like to brag. You know, we show off our wealth in this country primarily through our home. We also do it through our car and through the private schools our kids go to, but number one is the home. So we really look to those towns that people want to live in. We like to say that we will pay up to buy land at the corner of Main and Main, because we know at that location we'll be safe.
So you're looking at basically the old names on the northeastern sort of seaboard here. You're looking at the school districts. You want the best there, and you're looking at a demographic where jobs are going to be coming in rather than flowing out.
That's exactly right. Now, it's difficult to always find that, so we know sometimes we have to go out to the next town that will be developed, and that's what we mix into our company. We also have the urban now, and we have the active adult. So I think we have a good variety of offerings out there. We have the widest variety of any builder in the country.
Does it make any sense in some of these beaten down markets, Doug, around the country to start looking at them because the prices have become so depressed? Does that ever attract you, or you say, you know what, we're going to wait until we start to see some recovery or more significant recovery in those areas?
We're going to wait. We're not pioneers. So a depressed market, unless there's a terrific land buy at pennies on the dollar and we can make sense of it today and sell homes at a great profit today, we would normally wait.
All right. We're going to leave it there. Doug, thank you so much. You carved out a lot of time for Matt and me, and we really appreciate it.
Thanks for having me.
Thanks.
Doug Yearley, CEO of Toll Brothers.